Hi, everyone, and welcome to Everything About Wealth, the podcast. This podcast is focused on wealth building, and I am your host, Denny Troncoso. This is episode number 11. If you were with us on our last podcast, episode 10, Dessi and I had a great discussion on some of the basics of wealth planning for retirement. It's a great episode for folks that are starting out on their wealth building journey and those looking for some additional tools for their wealth toolbox. So make sure to check it out. In this episode, Dessi and I interview power broker Joe LaFleur with 100units.com. It is an episode packed with tips about how to work with brokers when buying a commercial real estate, selling, and so much more. As always, be ready to take some good notes. If you don't already, make sure to follow us on Instagram and Facebook at Everything About Wealth.
And I'm Denny Troncoso, and this is my business and life partner, Desiree Troncoso.
Hey, everybody.
And today we have a treat, as real estate is one of our favorite vehicles for wealth building. Our guest today is an expert on brokerage services for investors. His name is Joe LaFleur. He's a multifamily investment advisor and partner of 100units.com. He helps multifamily property investors maximize the value of their assets. And Joe has helped investors close on over $200 million of investment real estate. The investment real estate market is an imperfect market with specialized information only available to insiders. 100units.com provides access to the most accurate, real-time market data and trends so investors can make the best decisions. So without further ado, Joe, are you there?
Yes, great to have. Thanks for having me on, Denny and Desiree. Great to talk to y'all.
Same here. Thanks for being on the call, man. And it's been quite a while since we've caught up, but I'm glad to chat with you again.
Yes.
So tell us a little bit.
I've talked to y'all for, I don't know, how long? 5-6 years.
Oh, my God. Yeah, it's been such how time flies, right?
It's been a while, yes.
I think we're getting old. Or just wiser, let's just say that. Well, Joe, for the listeners that don't know you, can you tell us a little bit about you and how you got started in real estate investing?
Sure. Johnny and I run 100units.com. We're a full-service brokerage firm. We specialize in multifamily assets in the Florida markets. And like we've talked about, we did over $200 million in investment deals and currently very excited about the multifamily market. And that's our entire focus for our business is brokerage of multifamily properties.
Got it. And what did you do in your past life before becoming a multifamily, getting into the multifamily brokerage business?
I've been in it over a decade, and so it's kind of hard to remember back then. But my actual background, I have a degree in electrical engineering.
Oh,
really?
And when I got started in the business, first I got into engineering, and that lasted for, 3 or 4 years. And I was looking for better opportunities. And I happened to come across brokerage as a business. And at the time, I didn't realize just how well it was going to suit my personality and my temperament. And I had no idea it was going to be as good of a fit as it turned out to be.
Wow.
And I also had the blessing of getting into the brokerage business in 2008. And so I got a chance to see it, the economy at its very worst for the last 80 years. And going through that experience was very informative and has greatly shaped the way I run the business today.
Wow.
Very good. Why did you decide to specialize in multifamily?
Multifamily assets have a lot of advantages that other investment real estate do not have. And one of the number one advantages it has is the fact that the government wants to make sure there is affordable housing for the population. So the government has incentives to make sure that the affordable housing exists and is profitable for investors to own. A lot of people discount this and don't understand that exists. The government, typically through Fannie and Freddie, actually subsidizes investors in affordable housing because they want to make sure the population has places to live. And that's something to take advantage of. The other thing is, since I went through the Great Recession, I got to see all the different asset classes and see how the different food groups went through the worst economy we've had in 80 years. And the ones that survived and the ones that did the best were multifamily, because no matter what's going on, no matter how bad the economy is, no matter people losing jobs, everybody has to have a place to sleep.
Right.
You can shut your business down, you can shrink it, you can fire employees, but you got to sleep somewhere.
Yeah.
And the ones that survived the most were all multifamily.
Very well said. Very well said. We believe that. Now, I know you work with different types of representation in brokerage. You work with buyers, you work with sellers. If we're focusing on when you're representing a seller, what's the ideal buyer for multifamily real estate that maybe you're working with on a day-to-day basis?
That's a great question. Ideal buyer. I'm not certain. So that's like the ideal painting. I think that's in the eye of the beholder.
So
Typically, my job is that I'm representing a seller and helping them with the transaction of selling their asset. So it's not that it's my ideal buyer; it's the seller's ideal buyer.
Mm-hmm.
So it's my job to put it together so that the buyer and the seller work together. They get the transaction done, and it's more the seller's ideal buyer than mine. And every seller has their own motivations, their own things they're looking to accomplish. And it's my job to match up the best possible relationship between the buyer and the seller.
You're more than a matchmaker. That's the majority of your job. You're finding a seller that wants to sell, has motivation to sell, and then finding a buyer that meets the needs of that seller.
Yes. And it's important to have that match work together, because it makes the process so much easier when you have the right buyer and the right seller together.
Now, what is the buyer, in general terms, what is a buyer that is going to buy a multifamily property? What does he need to have? What are some of those basic requirements that you are looking for to say this person is serious?
So investors, when they're getting started, it's important for them to go talk to their lenders and make sure they get qualifications, make sure they have the liquidity requirements to make sure they can get the loan that they're going to need to purchase the asset. I would also recommend them to go get educated ahead of time. That way they've talked to other owners, they've read books on ownership, how to operate property, because it's important for them to be able to execute when they get under contract. And it's also important that they know what they're buying beforehand and they know what they're about to get into. And that's all on the investor.
Right.
And if possible, I would recommend that they find somebody who's done it before and either co-invest or work a deal with them or get their insights on buying a property if it's the first time you're executing on a multifamily asset.
Yeah, we agree with that too. It's what we usually recommend for new investors. And that's even how we started. We started out with a partnership as well to kind of get your feet wet and understand the ropes. And like you said, they should also be more familiar with what type of lending they can get as well. It makes your job easier too,
Yes.
to help them find properties that are within their criteria.
Yes, yeah, it's important for people. People don't often understand that. They think that buying real estate like it's a stock or a bond, and it's not. It's a living, breathing entity that takes management, how you operate it, what you're going to do with it, how you finance it, when your exit strategy is, what your intention is during your hold period. All have a huge impact on the return you're going to get and how successful that investment is going to be. So it's not just purchasing it as a one-time decision. Your decisions are going to go on for the lifetime of that asset as long as you own it.
Yeah, we agree with that 100%. Now, talking about that with the decisions that you made regarding the asset, what are some of the top mistakes that you see investors make when they're buying these multifamily properties?
I would say the first mistake would be wasting time. Time is your single most precious resource, and investors who are new to the business, they'll spend many hours working on things that are not going to have any impact on their success. And that would be the number one mistake I see people make, spending hours doing things that are going to have no impact whatsoever on their ability to purchase and successfully run an asset. Number two is trying to do something that they clearly are out of their area of competence. where they're jumping into something they just have no idea what they're getting into at all, without looking for any advice, without looking for any help, or they just jump into something where they're way off in left field from any experience that they have in the past. So those would be the two biggest mistakes that I've seen.
When you talk about wasting time, could you give some examples of what the investors are doing that is not going to help them in their business, like you said?
So I've been doing this for over a decade, and I run into the same people, especially at seminars and other, like you end up in networking groups and you end up talking to people, and I end up running across buyers who I talked to 4 or 5 years ago about buying property. And they were, oh yeah, I was thinking about buying property, or I'm trying to buy property. And you run into them 4 years later, they're at another event. Oh, hey, how you doing? And I said, well, what have you purchased? You know, what assets do you own now? Like, oh, well, I'm still working on it. Well, what are you doing? Like, what do you mean still working on it? How many offers did you put out? Oh, well, I put out one last year. Well, why are you, like, what are you doing then?
Exactly.
Like, get focused on what you're going to accomplish and go accomplish it.
Yeah. Yeah. So basically, and I see this too, there's a lot of people that are out there that are doing education, but there's also a mistake of over-education and lack of action. So you over-educate yourself, you continue to go to courses, but you never pull the trigger.
Yeah.
Unless that's your goal, then you just like going to courses. And some people like fishing, some people like going to the beach, some people like going to courses. If you like doing that, that's awesome.
Of course.
Just be clear on that. That's what you're accomplishing with your time and your money.
Exactly. And then we also see people that focus on the wrong things. That you just said, one of the most important things is making offers on properties. People want to focus on not making offers. Well, I don't know what they'll do with their time, but they want to set up their corporation, but it takes them a year to set up their company.
Yeah, I don't think they don't focus on not making offers. I think it's just, there's probably some fear that goes into it, but at some point, in order for you to purchase, and also for people who are sending you properties, like if Joe, you need to put an offer down too, so that they can make sure that they're seeing you as a serious buyer, so that they're wanting to continue working with you in the future as well. But it's about action. I know it's a little scary, but sometimes you just got to put in offers and move forward.
Yeah, as a broker, your most precious resource is time. That's all you've got. And you deal with buyers. They ask you 20 questions, want to know things, then they don't put in offers. And they ask you about another property. Next, sorry. If you're not putting in offers, you're not doing something, then you're just I don't know what you're doing. You're just wasting your own time, wasting other people's time. I don't get it.
Yeah, it's just not being respectful of your time either, because they're not, you can work, like you say, you have a limited amount of time, you have other buyers you can work with, dedicate time to them, that they're going to be submitting offers and get the deal closed.
Yeah. If you spend time researching a deal, underwriting it, unless there's some really strong negative to that property, you should be putting in an offer after you've done it. You already put in 99% of the effort. You underwrote it, you researched it, you read about it, you looked at the area, you looked at the comps, you looked at the rent comps, you know what your pro forma is going to look like in the future, and then you just go underwrite another property. I don't understand. If you've done all that work, you know what the property is worth to you, you know where your value is, write up the offer.
Mm-hmm. Yeah.
No, I agree with that. And I even know, like Joe and Johnny, they've always approached it where it's like, just put in the offer.
Exactly.
It doesn't matter if it's below, if it's above, just put in the offer based off what you basically value and what it means to you. Everyone has different criteria, so there's no right or wrong. So you just need to put in the offer and see where it goes.
Now, Joe, moving over to the next question, and this is based on the market, how it is right now. Cap rates are dropping. As markets get better, competition increases, right? A lot of people jump into the business. They want to become multifamily investors. Some people actually even have money from other businesses or from other states like California here a lot, and they'll buy properties where the numbers really may or may not work. Where are the opportunities right now, in your opinion?
I really like multifamily investments, particularly on the affordable housing side. I think that is going to benefit the most from the trends that seem to be pushing forward. You have the best opportunities on the lower income spectrum because that area, there's almost no new supply. And there is tremendous growth in demand, which means at some point rents are going to be driving up. And I think you're going to see the largest push on the lower end of the rent spectrum as far as gains in income and gains in being able to drive rent and rental demand from tenants. If you look across Central Florida, the assets that are being built right now, the construction, the new supply, and there's over 10,000 units going up right now, with almost without exception, they're Class A. They're going to be on the very top end of the rental range. Mm-hmm. So to me, the best opportunities is on the opposite end of that. It's on the lower end of that spectrum where you're renting 2 bedrooms for under $1,000 a month. Because there's no way somebody can come in and build a property and afford to do that today. It's just your competition is limited to the existing buildings. And I also feel strongly that over the next 5-10 years, the push for the higher minimum wage, push for job growth, and particularly wage growth is going to be hitting our economy, which is going to be driving up that end of the spectrum, the affordable housing tenants, which means they're going to have more money in their pocket, which means they can afford a little nicer place, a better apartment. And so if you're on that end of the spectrum, you'll be able to take full advantage of it. The Fed recently came out and said that they are considering pushing their target from above the 2% range, which is going to have a huge impact on people on the lower end of the spectrum for your ability to drive rents.
Now, is there a difference in purchasing affordable housing versus just buying? Like you mentioned, there's a lot more new construction, also Class B assets, I would also say. Is there a difference? Like, what should an investor be looking for to purchase affordable housing versus just getting something that's a little bit more, I don't want to say traditional, but the norm in multifamily?
It depends on the properties and the locations.
Okay.
So some people are going to feel much better in A-class locations and finding a B-class property. They're going to feel like it's a much safer property, i.e. the return's going to be lower, but your downside risk is minimal. The ease of operation in A-class location is going to be, the tenants are going to be easier to deal with. Mm-hmm. They're going to be much more professional. You're going to get a lower return, but the operations is going to also be much easier and your downside risk is going to be much lower. You go on the affordable side, your operations are going to be more difficult. They're going to be more management intensive assets. Mm-hmm. And you have a little bit more downside risk that if you don't have the right type of management in place, properties can get out of hand from you. And so it's important to make sure that you have the right property to match up with the temperament that you have as an investor and your investors and your investment objectives.
Perfect. Now, there's a lot of opportunities. I know you talked a little bit about Fannie Mae and Freddie Mac, the government subsidizing financing. Now, those are some lending options that we've had on another podcast, a lender. But there's buyers out there, Joe, that are looking for deals that are no money down and 0% interest. It's something that is talked about a lot in seminars with what they call the gurus. What are your thoughts on that as a broker when you hear about those deals? Are they commonplace in the marketplace?
0 down or no money down deals, in my career, I have not seen a multifamily deal. I'm trying to think if I've even heard of any that have actually closed. Maybe somebody did a master lease at some point. So maybe once or twice out of 10 years. Mm-hmm. So I think what people would need to realize is you're talking about an extremely rare anomaly in the market to find an owner of a property who is in such a situation that they need to unload the property and would be willing to do it in a no money down scenario. I would say it's an aberration. It's highly unusual in the marketplace. So just be aware of that.
Mm-hmm.
You know, lottery tickets. There's a lottery winner every single week. It does happen. But I don't think that means you should take all your money and go buy lottery tickets tomorrow.
Exactly. No, and I appreciate you explaining it that way, because I really want that to hit home. To find a deal that's going to require no money down at all, it's very rare. Is it possible to win the lotto? Like you said, it's possible, but it's highly unlikely. So for you to find a deal that you can close on, you need to get some capital, whether it be from investors. Maybe it's a no money deal where it's none of your money. Maybe it's investor capital, even though I believe you should have some skin in the game. But maybe that's the way that you structure it. The 0% interest is another thing that is not that common. And when you talk to brokers like Joe and you're looking for that, Joe's going to say, well, I don't really have a lot of time to look for these type of properties. I'm going to focus with other buyers. Am I right, Joe?
Yes. Usually I just say, good luck.
Yeah.
Let me know if you find it.
He may not even tell you anything. He just say, hey, good luck with that. You know, I'll see you in 5 years at the next seminar, the next event. So, Joe, market cycles, where are we? Where are we going?
Yeah. Where does your crystal ball say about the next 2 to 5 years for the market?
I do not know. If there's anything I've learned that I don't know, I have a strict policy of not knowing. Every time I thought I knew, it turned out I was wrong. So now I just don't know.
Well,
I have an agnostic policy on the front. I can look at what is happening today and what's happened in the recent past and make some extrapolations and what they call swag. Yeah. So we've got rising interest rates. We had 4 Fed increases over 2018. They put it on pause going in after the stock market tumble in December. We've got Fed tightening. They've stopped their asset purchase program. So we've got Fed tightening. We seem to be having a huge push on wage increases, which means, to me, inflation is going to be around the corner. And every single one of those signs points well to multifamily properties, because as far as real estate, it is the best reactor in an inflationary environment. Your leases are turning no more every 12 months. So you have a chance to raise rents every 12 months. You're not locked into 3, 5-year, 10-year leases. And the people that you're serving, the tenants that you're serving, your customer is going to benefit greatly from wage increases. And so they're going to be able to afford a little nicer apartment, have a little better amenities that they wouldn't have otherwise. You also have the benefit of, if we move into an inflationary environment, if you have one of your largest expenses as a multifamily investor is your cost of capital. So your debt service is one of your largest expenses. And if you're able today to fix that for the next 7, 10, 15 years, inflation will help pay your debt down for you, because you're going to be paying that debt back 7, 10 years from now with inflation adjusted dollars as opposed to today's dollars. And I think that's one of the biggest opportunities today. If you're a multifamily owner and you have a balloon and your balloon is coming due in the next 2 to 5 years, I would strongly recommend you look at putting long-term debt on the property. If you're not looking to sell it today and take advantage of an incredibly good market, put in long-term debt and lock in today's prices, which is sometimes tough for people to swallow, because if you've got 2 years left on your loan and you had a 5-year loan, that means you took the loan out 3 years ago. Well, it was probably sub 4%. So when you look at today's rates and go, man, I have a loan right now that's sub 4%, and I'm going to take a loan out and lock it in for the next 10 years, but it's going to be at 5%. My payment's going to go. It's hard to swallow that. But to me, I don't see how you go wrong locking in long-term debt today versus refinancing 2 years from now, because we know it's good today. Well, I don't know what it's going to look like tomorrow. or in 2 years for sure.
Yeah. And I think we are seeing interest rates increase. So that's a great idea to do for people who are looking, like you said, long term. So if you're looking to sell, of course, it's a little bit different story, but it's something that we've also adopted into our strategy and our properties, where we're thinking, okay, are we looking to sell? Or are we planning to hold long term? And if it's long term, we are refinancing ours into long term loans. So that kind of goes into the next question. If you are someone that is looking to sell your property within the next couple of years, what questions do you think sellers should be asking commercial brokers prior to giving them a listing?
The first thing they should ask them is what their track record is. That's probably the single most important thing, is what has this broker done in the past? So how have they executed on previous transactions? What transactions have they done in the past? How did they work out? How did they handle difficult situations when things came up? And what were they able to successfully get transactions across the goal line? The other thing is going to be being very specific with the broker and say, what have you done? When you show a comparable list and here's 8 comparable sales, you should be able to point out the ones that broker sold, because they should know that market intimately. They should know exactly what buyers are looking for in that market and what buyers are active in that market. The things to look out for from a broker is the mysterious "we" or "our firm" answers. So the broker should be able to say, I sold this building, I sold this building, I know this a buyer, I know this seller, this is the experience we had, versus the mysterious we did this and we did that, and our firm has done this in the past. So because you're hiring an individual, one singular person. And along that same vein, when you're hiring the broker, the one that you're hiring, make certain that that's the one that's actually going to be doing the work on your property. Because it's easy to hire a broker and say, oh, this guy, he's really good, he's done a lot of transactions, or she knows all the comps, she sold 3 of the comps, that's excellent, so I want to hire her. And then when it comes time for property tours or when they're talking to buyers, it's actually their junior agent who started in the business 8 minutes ago, who's actually representing you and talking to buyers and presenting your asset to the marketplace. So it's important to know who you're actually hiring. The last thing would be how they come to the proposed price, because every broker is going to present you with, here's where we think the property is going to trade in the marketplace. Here's our recommended list price that we're going to take it out. When they do that, it's important not just to look at the number and say, oh, okay, I have 3 brokers. This guy's the highest. He says he can do $1 million more than everybody else, so he must be the best. It's important to look at how they're actually going to arrive at that number, and whether it's a realistic number or whether they're just showing you a highest number they can possibly come up with the intention of getting the listing from you. So it's very important to look at the methodology that was used to arrive at that number and whether it's a defendable number in the marketplace and reasonable to expect the buyer to pay that.
Yeah, that was actually one of our questions in regards to putting together pro formas. What is the goal as a broker? And you've answered that question a little bit, where you're stating it depends on someone who's trying to get the listing. So they may try to list it higher so that you will go with them so that they can sell your property. But you mentioned a key where you said you want to make sure that the seller is their pro forma or their listing price is realistic. How would a seller know when someone is just so far to the right versus someone that may be a little bit more realistic with the market, if they don't really have access to the information that you may have as a broker?
Well, first of all, they should have access to it, because every broker should show up with comparable sales. So properties that have recently traded in the market that are comparable, that every buyer is going to look at. And even if the buyer doesn't look at it, the appraiser is going to look at it, and the lender is going to look at it, and the buyer's investors are going to look at it. So it's important to have looked at that ahead of time. So you should know exactly where it stands versus the comparable sales. You're also going to have to look at it versus the income approach, because that's what the lender is going to look at. That's what the buyer's going to look at, but the lender's going to give a loan based on the in-place income. And it's important to look at what that's going to do, how the property is performing today, what that's going to do to the loan that a buyer is going to be able to get. Just to give you some ideas about that, you're typically going to hear lenders, they're going to send out term sheets, and it's going to say 80% loan to value at 5.25% interest, blah, blah, blah. What you're then on the third page under subsection F, paragraph D, it's going to say debt coverage ratio. That is going to be the restrictor, not the LTV. Yeah. I've seen so many buyers that tell me, oh yeah, my lender told me I get 80% LTV on this property. And I tell them, you're not going to get 80% LTV. And they're like, what do you mean? My lender, I've known this guy, John, for 25 years. He knows you only get 80% LTV. I asked him, what is your debt coverage ratio? Oh, it's 1.35. I said, well, how are you going to get 80% LTV on this property? And I had a deal blow up recently. This was 6 months ago. I explained this to him in the beginning. We went down the road. The buyer said, no, my lender promised me he's going to get it. A week before closing, the lender come back and said, oh yeah, see, what happened was when we ran the numbers, the debt coverage ratio didn't work out. So when I know we told you 80%, but now that your deposit's non-refundable, ooh, yeah, it's really going to be 65. So we're going to need you to bring another $150,000 to closing.
Oh my God.
So hope you don't mind. Sorry about this one.
Wow.
And the guy came to me looking for sympathy, and I just told him, I told you this day one.
Exactly.
You know why? Because I can read. It says so right here on subsection F, paragraph D. Now, your lender forgot to mention it to you.
Yeah. Or did he?
Yeah.
We don't know. We really don't know.
It's right there. So anyway, it's just when you're going down the road of being able to sell property, it's very important to know what constraints are in the marketplace.
Very good point.
And debt coverage ratio today is the biggest constraint. It's not loan to value. It's debt coverage ratio. That is the constraining parameter over and over.
Makes sense. And so closing up with the again, the listings, and what do you have to say to owners that are looking to list their property themselves or put them on the 10X website, which is the auction site that we all know about?
It depends on what their goals are. If their goal is a fire sale, I think an auction site may be beneficial. It may work out well for them. If they're just absolutely desperate and they need to close in the next 25 days, that may be a great place to sell it. But if you're looking to get a reasonable closing period and you want a reasonable price expectation, I think you're going to be much better off selling it with a broker who's able to access the market and know who the other buyers are and get the best price for you. I would also warn owners against putting their property out there. Like a lot of them, I can just list it myself on 10X or LoopNet or Craigslist or pick any number of sites. That information stays there. So if you're not serious about selling it, putting it out there, then it makes it hard to sell it, say 2 years from now, when you actually do want to sell the asset, then buyers are throwing that in your face that, this guy's been trying to sell it for 2 years. He must be desperate. And it makes it more difficult to sell the asset because once it's put out, it stays out forever. You can always Google the property name, Google the address, boom, there they come up.
Got it. Now, I know owners have different goals, and we're getting ready to close up the call. But this is an important question. I think will be helpful to a lot of the listeners. When is it a good time to sell? I know it depends on ownership goals, but I know the market's hot right now. But at the same time, you can lock into long-term debt and cash flow. Can you give me both sides of the argument, Joe? Why not sell the property? And I understand the whole keeping part, but why sell it? Why is it a good idea to sell right now?
I would say I don't know if it is or is not. That goes back to the eye of the beholder. That's a completely subjective question based on the objectives of the particular investor. But most of the investors that I deal with, they have a life cycle for most of their assets. So they have bought it for a particular reason. They're planning to hold it for a particular reason. And when that ending is coming near, it's time to look at selling the asset because it's done what it was supposed to do. And now it's time for them to move on. I would say if you're close to that, you're going to be better off today selling it than most likely you will be 2 years from now. Because we know the market is really good now and you're able to lock in a good price today. We hope the market's better 2 years from now, but we have no idea.
Exactly.
And so if you're close to your objective, you're right on the border of it, I would say take advantage of it today because you know the market's good today. And we've been on a 10-year bull run. And maybe it goes to 11, maybe it goes to 12. I don't know. I hope it does. But I think it's better sometimes to lock it in and make sure you've captured your gains. Now, and that comes back purely to what the owner's objective is, because it's totally up to them as to whether it makes sense to hold an asset or to sell it. So that just depends on what they're looking to accomplish.
Yeah, and that's something, we have an asset, you're thinking about selling the asset now, but at the same time can lock in long-term interest rates and keep it. The concern of you sell the asset, but then you have to find another asset to put the capital, and
very competitive
marketplace. So what do you have to say of an owner comes with that concern, that question to you?
Well, first of all, that's a very legitimate concern, and that means the owner's astute and paying attention to the market that they're in. So first of all, that's a good response to have. The opportunities you have is you can pay taxes today. And we've just had a tax cut. So if you're going to pay taxes, now's about as good a time as ever to pay taxes. B, you have the opportunities today to either exchange into a like-kind property, if you can find another one, or you can kind of put the money on the sideline through an exchange into a tenants in common arrangement, which are surprisingly liquid for real estate investments, and leave the money just sitting on the sidelines with a tenants in common on triple net lease properties. And they're surprisingly liquid. And you can just leave it, defer the taxes, wait a couple of years till you find the exact property you want, and then do another exchange into the property that you have your eye on or that you feel will better achieve your objectives. So those are your two options.
Very interesting. And the last one you mentioned, putting it in a tenant in common, either a fund or an actual property for a triple net lease.
That's correct. Yes. There's multitudes of versions of them. Some use Delaware statutory trust. Some use tenants in common. Typically the ones with the tenants in common, the reason that investors like them is because you can exchange into them and then you can exchange out of them with the same. And it's basically, you have a pool of, so you don't take ownership of a property, you take a 1/10 ownership of 5 properties with your particular LLC in your exchange. And then when you go to sell it, you sell the 1/10 ownership in 10 properties.
Makes sense. Yeah, you sell your piece of the tenant in common, because every tenant in common it's its own ownership structure.
You own 100% of the 10%.
Exactly. Very interesting. I think that's a good benefit that I don't hear it talked about in the marketplace very commonly. No. So with closing up,
it's surprisingly advantageous for sellers. And if you haven't looked at, I would strongly recommend look into. There's several versions of them. There's a multitude of companies that do them. They do an awesome job, and you make 4 or 5% on your money while it sits there. But you can exchange into it and exchange out of it relatively easily. And there's a relatively liquid market for it compared to most real estate.
Yeah, I'm definitely going to take a hard look into it, to both in our particular situation, but also to be aware of what the opportunities are there for 1031. Yeah. So with that, I want to say we're going to go into the last bit of our call. Any real estate or business book recommendations, Joe, for things that new investors or even just advanced investors, anyone?
In regards to real estate, I would say Timing the Real Estate Market by Craig Hall. I would also recommend The Real Estate Game. Those would be the two that jump to my mind quickly. And then Everything Real Estate Investors Need to Know About Cash Flow would be another one. Those probably are only really interesting specifically to real estate investors. As far as the universe, I would strongly recommend Thinking in Bets by Annie Duke, and also Factfulness, which talks about facts throughout the entire world and general knowledge. All of those things. I particularly that book where it just talks about the world is actually significantly better than what most people think it is. Because we spend all the time watching Fox News or CNN and ABC and all it is people blowing up and arguing and how horrible things are, and the economy's on the verge of going under, and we're about to go into a recession.
Yes.
And when you actually do a study on what's actually, the world is so much better today than it was even 50 years ago, just across the board. It's amazing.
I read that book, Joe, and I loved it. I love the author. I've seen him do his TED Talks. I think his name's Hans Rosling. He passed away a couple
Yes. Oh, thanks. I couldn't remember what it was.
Yeah, I love that book, and I love what he talked about. And like you said, the world, it's not perfect, but it's gotten a lot better than where it was.
Yes.
So highly recommend those books, and definitely the others I'll definitely add to my book list. I'm a big reader, so I love it. Now, when you're not selling multifamily, Joe, what are you doing for fun?
Elaine and I, our objective every year is to take at least one passport trip. So we get outside the country at least once a year and take a nice long trip.
All right.
And that's my adventures. And then for during the year, we usually take 3 to 4, long weekend trips here domestically or within Florida. You can get a lot of places within a couple of hours plane ride. So we try to keep moving and checking out the world. That's something I think is easy to take for granted as Americans, that we grew up here and we've seen it, and this is the only place we've ever been. And to think it's easy to take for granted just how good we have it here. And we're in a great country, and we have incredible opportunities here that not everyone in the world has. And it's easy to take for granted until you get outside and start seeing the rest of the universe.
It gives you a different perspective, right, when you go out.
Yeah, that's something that we enjoy doing. Where are you guys going this year for your passport trip?
We're overachievers this year. We got 2. So we're heading to Norway in 2 weeks to go see the Northern Lights. So we're taking a cruise of the North Sea and see the Aurora Borealis. And then in the summer and into the summer, we're heading to Burgundy to check out the wine country. So we're going to head up to Champagne and then go down through Burgundy, down all the way down to, trying to figure out how far down we go, through Chablis, through Burgundy, and then back up to Paris. So we're overachievers on this year.
Awesome. Enjoy yourself. Now,
thanks.
What are some of the things that you see, some of the successful investors that you work with or that you've seen, that you've worked with in the past, habits, actions that they take that you could share?
I would say the first thing is that they are focused on what they're doing. They know where they're going. They know what they want to achieve, and they're very clear about it. And they take action steps every single day to get closer there. Over and over, you talk to investors who are being successful, and they know exactly what they're planning to do, and they know what it's going to take to get there, and they're taking a step today to get closer to that goal. I would also say the successful investors, the actions they take, they have a long-term approach to real estate and investing, and they know that the people you're dealing with today, you're probably going to end up dealing with them or somebody they know in the next 1 to 2 years. And how you treat them and how you act with them is going to come back, and people will remember you.
Focus, clear actions daily, and integrity, and do business professionally. Awesome.
And last but not least, of course, how do people get in touch with you, Joe?
Oh, the easiest is at 100units.com, 100units.com. That is the easiest way to get in touch with us and all the deals we're doing, and also get access to our owner resources is also available there.
Awesome. All right. Well, with that, I'd like to say, Joe, thanks for taking the time to be with us on the call today. We've learned a lot from you, and I think the listeners are going to benefit greatly from it. So let's hopefully get you do some business soon. Hopefully, after you come back from your trips.
Awesome. Sounds good. Thanks so much.
All right.
Thanks,
Take care.
Joe.
Bye bye.
Take care.
Okay. Thanks. Bye.
Thanks for tuning in. I hope you enjoyed the call and learned a lot from Joe about working with brokers. To learn more about real estate investing or how to be a capital partner, visit our website at www.everythingaboutwealth.com. If you like the show, make sure to subscribe and like us on iTunes or your favorite app. With that, see you on the next show. Take care.